starting with partnership chapter 2 of your syllabus. This is where the piecemeal distribution comes from. Yeah, the weightage as per ICI's knowledge portal, BO's knowledge portal is 20 to 30% of the marks for the chapter of consolidation and dissolution of partnership together. Single chapter's weightage is not given. So this is the weightage of dissolution of partnership and consolidation. So how much marks can be expected from partnership alone, that I can't really tell you. But what I can show you is the past examination trend. Based on the past examination trend, what I can tell is it can come about 20 marks. Sir, how can I say 20 marks? Have a look. In May 18, question number 4A, 15 marks question was there. And this chapter was in group 1 then. And question number 4B, 5 marks has come. In November 18, question number 4 for 20 marks. May 19 may again group 1 20 marks question. November 19 may again 1 15 mark and 1 5 mark question. November 20 may 15. January 21 may 15. So every attempt I have handpicked and then told you how many marks the question has come. Yeah, November 2021 ka paper is not included. That I've kept it aside because I want to discuss that paper completely at the end, so that you get one feeler as to how the paper has to be addressed. Got it? Yeah. And what can you expect from this chapter? Questions on preparation of distribution table under piecemeal. Yes. Distribution of table under maximum loss. This is what we are trying to discuss in our present session. These two topics on which the questions can usually come in our exam. Got that? Fantastic. So theory and all is properly covered in up here, like how to deal with form when it is dissolved, when it is not distributed and everything, transferred to the interest of third share party. That is the reason for the firm to go into dissolution. How does the firm get into dissolution? And then journal entries in each of the cases. Everything is discussed and put across in a very beautiful manner with lot of memes and lot of fun related images, which would help you understand the topic better. I will quickly come into piecemeal distribution. So it's like Garn versus Murray, something that bothers you the most. When is it applicable? What is the ruling? Facts of the real case. And then what is the points to remember when it actually, this case actually happened between those two people. Yeah. So all that. And yeah, this is Garner, this Murray, this is Justice Joey, who gave the entire, what do you say, case judgment. And what happened in 1903. Yeah. That is about 635 and then 235 pounds ka case it was. Hello. Yeah, this is what we're discussing. Piecemeal distribution. Yeah, like I mentioned some time ago, at the time of dissolution, assets were gradually sold and liabilities were gradually paid off, and thereafter partners' capital account is settled. This is presented in a statement called a statement showing distribution of realization proceeds, and this method of realizing the assets in parts, paying off the realizing the assets in parts, paying off the liabilities in part, and repaying the capital also in small installments is what we call as piecemeal distribution. Because whenever you sell an asset and then receive some amount of money, you can't wait for receipt of all the assets and then say that I'll start selling liabilities. I'm like, no, I'll sell all the assets, then I'll pay liabilities. No, all the liability orders will come and hit you. You can't do that. You would have to start paying them as and when you start collecting money. So when you start paying them, whom to pay first? You have a similar thing in liquidation chapter also, no? So whom to pay first? How much to pay? How to pay? What proportion may you pay? Who will get priority over whom to pay? All that is basically what's computed here. Got it? We've got a very nice message from Sujan Limbu. Lot of love from Nepal, especially thanks to all Unacademy team. Yes, it's made education easily available to people from different parts of the, I can't even say country, globe you can say. Because, say, our friend Sujan from Nepal is thanking Unacademy for this beautiful setup that they made, and then classes being made available to everyone, connecting educators from different parts of the country to learners from across the globe. Yeah. Like I was mentioning before, methods of capital repayment are two. One is the maximum loss method, other one is the highest relative surplus capital method. Highest relative surplus capital method is also called as absolute surplus method, and maximum loss method is called as notional loss method. Now let me get back to the point wherein I was telling as to how are these two methods the same and not very distinct from each other. Now, where do we basically do all the calculations? We prepare realization account. People must be very much aware of the topic of realization account. Realization account. Oh, Sorry. Oh, yeah. There you go. Let's open back again. Something wrong. The pen icon is not getting selected. Might have to close this. Let me give one last try. Yeah, now it looks like it. Every other option is working other than those two. Fine, I have an alternative. Not to worry. I can use the Excel sheet and then type it down for you. Be ready to face the difficulties that will arise. Yep. We were discussing piecemeal distribution. I told you that there are two prominent methods of piecemeal distribution. One being highest relative surplus capital method, and the other being what do you say, maximum loss method. And what I mentioned to you is both the methods have no difference. Both the methods are same. This is like preparation of partners capital account in a little different manner. What is it that we should prepare? Partners capital account at the time of liquidation. Oh. Whatever the partners capital account that we prepare now is basically this way. You would agree with me. We'll have particulars, amount, debit side done. I'll make the credit side also available now. So in our partners capital account, we would have items like amount payable to the partner in the beginning. I'm assuming that this is partners capital account of maybe all the partners together. We'll have multiple columns though. Yeah, here we'll write there by balance carried down. Balance of their capital that needs to be paid to them. Got it? So out of this money, some amount of money will be settled to them on realization that will be made available back to them. We'll write to on the sale of assets and after payment of all other liabilities, whatever is left is distributed to partners. We'll write to cash account and anything that's left out after that will be written as not balance carried down. It will be what? It will be realization account. This is brought down. So after you bring down the balance that is payable to the partner, this includes their share of capital, share of reserves, share of goodwill, or share of unrecorded asset, or any other item that is basically related to the partner will come in here. Out of that, some money will be paid. Some money will be paid. Such amount which cannot be paid will come here. What is this? This is realization loss. Loss on realization. What cannot be paid? What cannot be paid, which is majority of the cases. Usually there is no case where I want to say you might not come across a case where it's been paid excessively to the partners. If they have so much extra, they would continue doing the business, and they would not wind it up. What's happening? So in this scenario, which you are very much aware of, is something which we can use as a very, very basic point based on which we can understand our piecemeal distribution. If you keep this as a base, if you first identify how much cash is to be distributed to each partner and then find realization loss as balancing figure, you find realization loss as balancing figure, and then you keep the amount of money to be distributed to each partner as the first thing that you will find, then that would become highest relative surplus capital method. What do? You put the amount payable, from that you will deduct the amount paid, then what you get is realization loss. This is highest relative surplus capital method, meaning amount payable means you go on paying little money, ultimately to find out the money that cannot be paid back to the partner. Now, in an ulta scenario, wherein we first say this much is a loss, you would not get this much. This is the only money that you get. We decide how much money will each partner get, and then start paying them. That is something that we call as maximum loss method. So, what is it? In the highest relative surplus capital method. What is it that we do? We already know the amount to be paid to each partner. From the amount payable, we determine the amount paid deducted to find the loss as balancing figure. This, okay? Amount payable minus amount paid. This is like amount available. Yeah, is equal to realization loss. This is the approach under highest relative surplus capital method. Yeah, next we have with us maximum loss method. Under maximum loss method, what we do is amount payable minus minus realization loss is equal to amount paid. So this is how we deal with it. Though it looks like two different methods, frankly speaking, it's all one method and there is no difference is what I'm trying to tell you. Okay. Now let me teach this to you practically. Let us take an example. Let us take an example where Bhim and Chutki are partners sharing profits, losses in 1:2 ratio. Bhim gets less, Chutki gets more. Why? Chutki's mother is the person who's making the laddus for Bhim and Chutki to sell. The manufacturer is what to say, from the side of the Chutki. Chutki knows the manufacturer well, and she brings in more credibility, more profit, and more business into the organization. Okay, so share profits and loss in the ratio 1:2. Their capitals on the date of liquidation stood as follows. How much do you guys want the capital to be? Beam, can I write about 50,000? Chutki, I'll write about 75,000. Yeah. Beam's capital is 50,000 and Chutki's capital is about 75,000 rupees. Yeah. Following is the details of realization. Following is the details of realization. We can say 1st April. How much is the realization? About 20,000 rupees. 5th April, I'll say about 25,000 rupees. And 10th April, let's say that about 30,000 rupees is realized. Now, let's go back to 20. And lastly, we'll say, no, let's keep it short. 20, 25, 45 or 45 or another 50,000. Let's write here. 50, 95,000 realized. Balance amount is loss. That's it. This is the realization. There is going to be loss. Let there be loss. Let there be amount of loss. How much it will become? 45, 95, 105, 115. 115. Yeah, about 115, about 10,000 loss is there. Let that 10,000 loss be existing. Yeah, this is the realization. Following is the details of realization after paying outside liabilities. That will deal in a separate class, how to deal with, how to settle the liabilities. So this is the question. Now let's do prepare statement showing realization proceeds under case 1. Case 1 is which method? In case 1 we'll be doing our highest relative surplus capital method, and then case 2 is where we do maximum loss method. So this is our question. Yeah, you can have a look at the question or take a screenshot if you want, because I'll scroll down to now start with the answer. So now let's start with solution. Solution may first I'll start with case 1, which is highest relative surplus capital method. Yes. Now under highest relative surplus capital method, in the beginning, before we start distributing, we need to start computing the surplus, relative surplus and absolute surplus. How will we do it? We'll do it with writing the capitals of the partners in the ratio. To start with, I'll write Bhim, I'll write Chutki. Or let's start with capitals too in the beginning. Capitals. How much is the capital of Bhim? Bhim's capital is 50,000. Chutki's capital is 75,000. Then I'll write profit sharing ratio. What is the profit sharing ratio? Profit sharing ratio is 1 is to 2. So I'll write 1 by 3 here, 2 by 3 here. Now profit, the capital per share. For one share, how much is the capital that they have? Shall we do that? What do you guys say? Or you can write here 1 and you can write 2 also there. Yeah. 1 is to 2 is the ratio, no? So per one share, Bhim is bringing in 50,000. Yeah, and 75,000 divided by profit share. How much is the Chutki getting? Chutki is getting 75,000 divided by 2, 37,500. Yeah, 37,500. Now tell me, for that one share, yeah, capital per share, Beam gets 50,000, Chutki gets 37,500. So Chutki is getting higher capital at lower, higher share in lower capital, higher share in the profits with lower contribution as capital. So we need to take, okay, taking lower capital per share as base, taking lower capital per share as base. What are we trying to compute? Computing capital per share. So what are we trying to find? Now which one do we pick? We take 37,500 as the base. If 37,500 is the basis, how much should be the capital of the partners in the proportion to their share? So we do 37,500 into 2. We'll get 75,000 here. Here we'll get 37,500. Why? For one share, Beam was supposed to get only 37,500 in that case. So what I did here is 37,500 multiplied by 2. What I did here is 37,500 multiplied by 1. That's what it is. This is the amount of capital that they should have contributed. Now, Chutki has contributed. How much should have been contributed? Yeah, 75,000 is what she should have contributed. 75,000 is what she has contributed. Whereas Beam was supposed to contribute 37,500 to maintain his profit sharing ratio. But he has contributed more than 37,500. He's contributed 50,000 rupees. Now tell me how much is my relative surplus? Or else say surplus first. Then let me explain it to you as to what is relative surplus and what is absolute surplus. So 50,000 is the capital contributed, 37,500 is what should have contributed. So surplus that he has contributed is 50,000 minus 37,500, that is 12,500. And Chutki has no surplus whatsoever. How did we arrive at this, sir? I'll give you an understanding here. 50,000 minus 37,500. And over here it is 50,000 minus 50,000. Now this is absolute surplus. Meaning, whenever the money is being made available to distribute it to partners, we will not pay the money in 1:2 ratio to both the partners in the beginning, because Beam has contributed more than what it should contribute to arrive at the profit sharing ratio. How much is the money that Beam has contributed in excess? 12,500. To start with, what you would do is, first you pay money to Beam to the extent of 12,500 from the amount available. After that, whatever amount is available, that will be shared between them in the ratio 1:2. That is in the share ratio of their capitals. So whenever you start paying all the partners, you would have to first pay Beam to the extent of 12,500, so that he gets the money that is contributed excess before Chutki. Got it? So this is what we call as highest relative surplus capital method, and this is absolute surplus. If in case there was one more partner and we are supposed to redo this step one more time, then that first time surplus what you get will be called as relative surplus, and then the last surplus what you get, there is no further computation, that is what we call as absolute surplus. Yeah, so absolute surplus is 12,500. Now let's prepare statement showing distribution. Highest relative surplus capital method, HRCM. Yeah, so you will have date, particulars. Particulars will go for more than one column. Then we'll write amount available column, amount available, then amount payable, and then partner's capital. First one being Bhim, next one being Chutki. Fantastic. So this is our table. Now let's start our distribution. Let me draw the format real quick. Done. So to start with, we'll go on 1st of April or even before that. Beam Chutki, amount payable to Beam 50,000, amount payable to Chutki 75,000, total amount payable 1,25,000. I hope you got this. Then amount available will go for 1st of April 2000. Here is given 22. My problem, no, I'll assume it to be 22. Okay, so realization proceeds. How much money did you get from realization proceeds on 1st of April? On 1st of April from realization proceeds, you got 20,000 rupees. So amount payable is 1,25,000, you have 20. You cannot sell the other assets and together and pay at once. No, you have to start distributing. How do you distribute this 20,000? In the beginning, at first, you will pay the absolute surplus. Absolute surplus is what you've identified here, 12,500. So absolute surplus of 12,500 will be first deducted from the amount available. It will be deducted from the amount payable because you are paying, and you would pay this money to Beam because he is the one who's contributed in excess in the beginning. Yeah. Now after this table, you would quickly find how much is the amount still payable and outstanding to be paid, which is 7,500 is the amount still available, and amount payable is 1,12,500, and here 5 lakh. Oh, it's not 5 lakh, it is 50,000. Bhunesh is participating actively in the chat and then telling the answer. Very good, Bhunesh. 75,000 is the amount payable to Chutki. Got it? Now, next 7,500, whatever is left, no, we'll start distributing this also. Distribution. How much will we distribute? 7,500. Amount available will become 0. Amount payable also will decrease by 7,500. But this money will be paid to whom? Beam or Chutki? Will you pay to Beam 7,500 or will you pay to Chutki 7,500? Yeah, thank you, Bhunesh. Thanks for correcting. Thanks for helping me with that. Yeah. To whom do we pay? To Beam or Chutki? It has to be paid to both because it is a second set of money. See, we need to pay second set of money that we need to pay is after paying this 12,500, but I have to pay the priority number 1. Here it is priority 1. This is priority number 2. So now we need to pay 37,500 and 75,000. That is in the ratio of 1:2. So what will we do? We will pay this 7,500 in the ratio 1:2. You can take either 1:2 or you can take 37,500 divided by 37,500 plus 75,000. So I'll take 1:2. That would be easier. I'll take 1/3. Yeah. Over here it will be 7,500 multiplied by 2/3. Yeah, equal to this divided by 3 into 2/3. So this is the way we're going to distribute that. And after this distribution, amount available becomes 0, but amount payable will still be there. Amount payable still exists. So let's draw a line to see what is the amount still payable. Yeah, amount available will become 0 here, or I'll say 7,500, 7,000. It became 0, and then over here it is 1,12,500 plus 7,500, still 1,05,000 to be paid. Over here it is 37,500 plus 2,500, 35,000, and lastly here 75 plus 5, it is 70,000 payable. Yeah, next we'll go to the next realization. What's our next realization? Next realization is on 5th of April. 5th of April 2022. There is realization proceeds. How much is the realization proceeds? 25,000 rupees. Yeah, come on. Let us now start distributing this 25,000 rupees. I'll do less. Distribution minus 25,000. This has to be paid. So amount payable also will decrease by 25,000. And this 25,000 has to be shared in profit sharing ratio. How much is that? That is 25,000 into 1 by 3 and 25,000 into 2 by 3. Yep. So how much is that? 25,000 divided by 3. Let this be there. This also will do. Into 2 by 3. Get this? 8,333 and 16,667 is the distribution that should be made. Got it? Then come on, let us redo the entire thing. The next period now. I'm going to say after this transaction. Yeah. So what is the amount available? From 25,000, when we distribute entire 25,000, what we're left with is 0. And the amount available is 0. Now let's compute amount payable. How much is the amount payable? From 1,05,000, if you pay 25,000, what we're left with is 80,000 rupees. And to Mr. Beam, to whom we were supposed to pay 35,000, if you pay 8,333, what we're left with is 26,667. And 70,000 is amount payable to Chutki as capital. Of that, if you have distributed 16,667, we still left with 53,333. So this is the amount payable. Yeah. Now the next realization is happening on what date? It's happening on 10th of April. That is to the extent of 50,000. Let us do that. 10th of April 2022. We'll be doing realization proceeds. Amount received being how much? 50,000. 50,000. This 50,000 needs to be distributed. So I'll write here less distribution, which is again 50,000 rupees. If I distribute this 50, amount payable would also decrease by 50. This 50 has to be distributed to partners in the ratio of profit sharing. So I'll do 50,000 into 1 by 3 and 50,000 into 2 by 3. I hope it's still visible, no? If I zoom out a little, divided by 3, we get 16,667. And if I do this multiplied by 2 by 3, we get 33,333. This is the amount paid. So after paying this, what is the amount that's left? This is the last realization. There is no further realization. So amount available has become zero. How? From 50,000 available, we've distributed entire 50. So what we're left with is zero. What was payable was 80. Among that, if you paid 30, we're left with 30,000. Amount that was payable to partner Bhim was 26,667. If we paid 16,667 out of that, we're left with 10,000. And Chutki as a partner was supposed to receive 53,333, of which if we have distributed 33,333, what we're left with is 20,000. So this is the money that is still not repaid in spite of all the realization. This is realization loss. So realization loss is distributed between total realize 1 second. Yeah, realization loss in total is 30,000, which is distributed between Beam and Chutki 10,000 and 20,000. So how did you arrive at this? Very simple. Look at this. Amount payable to both the partners is 50 plus 75. That is 1,25,000. Amount available is how much? 20 plus 50, 75, 20 plus 20 plus 25, 45, 45 plus 50 is 1,35,000. Lakh, no, no, 75, 85, 95. 95 is the amount available. 1,25,000 is the amount payable. So there is 30,000 shortage. That 30,000 loss has to be shared between B1 Chutki in 1:2 ratio. Yeah, that is 10 and 20. That's what we've done. So 10,000 and 20,000 is the amount of loss, and then the money that they get is 12,500, 2,500, 8,333, and 16,667 to Beam. Chutki will get 5,000, 16,667, and 13,330. This is how do we do it under highest relative surplus capital method. What we did under this method is first we counted as to how much money will be paid to each partner, and then we found the realization loss as balancing at the end of the problem. Now, next thing that we're going to do is we're going to learn how to do maximum loss method. Under maximum loss method, the table will become ulta. First, we'll deduct the loss, and after we deduct the loss is when we'll understand how much money needs to be distributed to both the partners. So this is it for this session on YouTube. I'll be coming back very soon on continuation of this very video. Discussion on piecemeal distribution part 2. In that video, for the same problem what you saw right now, we will be solving under maximum loss method. And if in case you want me to extend this to help you out with distribution of realization proceeds against all the liabilities, you can definitely let me know in the comments to this video, or you can write into me. My profile's link is available on the description to this video. You can search my name, you will find it, CA Rajavardhan, or you can also call me accountsman. So that's it for now. Hoping to see you all soon to complete the rest of the problem, that is the same problem under maximum loss method, and lot more to come about with regard to CA Intermediate and CA Foundation here on this Unacademy's YouTube channel, as well as on Unacademy special class platform. Till then, remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you guys are learning something new or having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. The thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, one simple question that I have for all of you is, are we in the game?